Hello, everybody. It's Bob Anderson, and today is January 13th, 2025. I hope everybody's doing well. I'm doing pretty good for various reasons. Uh, just quick update on my trading because I like to keep you guys attuned to some of that. I had my first losing day last week. It was on Friday. Now, I probably never should have been trading on Friday. For those of you that don't know, but my beloved Notre Dame played Penn State on Thursday night and won with a last, field goal at the end of the game. Holy crap. Absolutely amazing game. Real proud of my team. A school of 86,000 students playing a school of 13,000 students. Let that sink in. And the 13,000 rose up and beat them down. Anyways, so I was so hyped and pumped all night, Thursday night, Friday morning. I don't even remember falling asleep. And then, I sit in front of my charts at 9 o'clock. I had an appointment at the factory that afternoon. My mind was racing, and there I was taking some trades, and they just didn't work. I wasn't thinking. I got very fortunate because I was trading when I shouldn't have been trading, but I only lost $80. So, I only took 2 trades, and then I shut it down. I told myself, Bob, you're not even, like, you're entering the trade, and you're not even looking at the chart. You're thinking about the touchdown run last night. So anyways, again, it goes back to your mind has to be in it or you shouldn't be doing it. 100% when you're trading, 100%. You can't have like 80% attention. You need to have 100%. That's my opinion. Anyways, I broke my own rule on Friday. Thank God it only cost me $80. Okay. So, but I'm doing well. I made $550 today. I'll show you the trade. I'll show you the main trade I took. It's about today's topic. Okay. And by the way, no, I didn't take it in the NQ. I took it in the RTY. Okay. I got all my data working for all my charts now. So I'm back to looking at gold. I did take a trade in gold. I made like $150 earlier today too. I took one trade in the NQ. It went up, came back down, and I got knocked out at break even. All right. Well, let's talk about today's topic because couple things. Again, there are some tools that are on these charts that are supposed to help make this easier for you to comprehend what it is I'm trying to tell you. I know some people look at the charts and go, oh my God, all I see is candles. And that is true. And then there's others of you that watch my videos and you like have an epiphany moment and you send me Charles Dickens novels about how this is the greatest thing since sliced bread, which, to be perfectly honest with you, I don't disagree. Okay. And I'm not saying that because I'm sitting here doing it. I'm saying it because I spent years doing things that did not work until I started doing this. And part of what makes this so good is it's so simple. So anyways, what I want to talk about is I want to talk about the Donchian Channel, swing indicator, and daily high-low. Why are those on the charts? What are we trying to do? What am I trying to get you to identify so that you can identify when to partake and when not to partake in the market? And so the Donchian Channel, by the way, I don't have... My longs are black today. And my shorts are quasi-red. Anybody want to know why? Yeah. Because I have 2 Boston Terriers and they got into my markers and they ate them. So my green one's gone. And my red one is bit and got cracks in it and stuff, so it's drying out, so it doesn't even work. So anyways, I had to go with what I had. puppies, they got a teeth on everything. So anyways, but this is my Donchian channel right here. So kind of like what's going on here is this is backwards to the left. It's finding the lowest point price has been in the last hour. So every time a minute clicks, it's looking backwards an hour and making sure that it's at the low point of price for the last hour to the left. Same thing up here. It's going back to the left and looking for the high point in the last hour. Back to the left. Why is that important? It's not really that an hour is important, okay? It really isn't. So I'm going to kind of confuse you a little bit here. It's not that an hour is important to your left or an hour is important, on the high side or on the low side. It's not that it is, but it's an identifier to you that we are now going into, when you go like this, through this, it's an identifier to your eyes that we are now going into a new zone that we haven't been in for a while. That's the whole purpose of having that on there, is to help you say, oh crap, that Donchian just moved either up or down. We're entering a new zone that we haven't been into for at least an hour. Okay? So I need to start paying attention. It's like an attention grabber. Okay? Swing indicator. That I have on the chart, which when you get a little more advanced in doing this, you'll really come to appreciate the swing indicator, because it does show you on your chart, like I'm looking right here in oil. It's literally showing me the steps, okay? And I have it set at 5. So what it does is it does like a 5-minute calculation, from where a swing happened, where a pivot low or a pivot high happened. And it does a 5-minute calculation. And if it's a reaffirmation that does become a swing, then it creates a dash there. And then that becomes like on a long side, if it's putting a green dash across, then that becomes your resistance spot on the short term. This is your resistance spot on a longer term. Now let's get to the last part, and then I'm going to put it all together. Daily high, daily low. Okay? That's on this chart also. It's on this chart because when you go through the daily high, like we did in oil today at 110, let's just say, now you've really gone into some new territory. Breaking a swing, you're going into new territory. You're breaking. You may be setting some more. You may be recreating steps. Donchian means, holy crap, we're going into a new area that we haven't been in for at least an hour. Daily high, daily low, we haven't been here since at least yesterday. Okay? So each one of those has a different significance of how important they may be. Why do I emphasize these things? It's real simple. This whole trading philosophy that I have is based off of the premise of fear of missing out. Okay? Where the algos take advantage of the people who chase the runners. Okay? And so our approach is to try to be more conservative and not chase the runners, but instead reverse when we think the algos have cleaned out the runners that chased. So let me go back. When this Donchian channel right here created a new high right here, okay? When it did that right there, there's people that are like, oh my God, it's going long, and they start jumping in. Don't you think the big algo companies know that? Don't you think they trapped them there? Because don't you find it interesting so many times when, just like I'm sitting here looking at oil twice this afternoon, where they do that and then they all of a sudden go roll over instead of just taking off like you would possibly think. So Since we're taking a more conservative approach to trading, what we're looking for, meaning me and whoever else does this, we're looking for it to blow off that break, and then reverse itself back to a common area, where the algos in their minds feel like they've cleaned out all these people that went long here, stole all their money, and then all simultaneously reverse the position and go back in the direction, which is back up through here, that they intended to do in the first place. Okay? So the whole premise of this business, of this trading philosophy, is to anticipate that when it breaks the tops of the daily high, the Donchian Channel, the swing indicator, when it breaks those tops, that it's going to come back and seek support as they clean out the stops of the longs, for example, in this case. And then once they clean them out, reverse it and make them all sit there and cry because they were in right here, but when it got down here, oh my God, I'm down $300. Mm-hmm. Exactly. Now, if the damn thing runs away, if it goes up through there and does run away, don't worry about it. That doesn't mean much, because what's going to happen is your 1 minute gold line is going to chase it. And as long as it stays in formation, you're going to have a trade on that. So what I want to do is I want to show you some examples. And then, and one more thing. Okay, so let me go up here to the top over here. So 1 minute gold line, which is my 9 EMA. No secret there. It's a 9 EMA. 9 EMA. No secret. None of these are secret indicators. Woohoo! 1 minute gold line. You're looking for Donchian Channel break before the pullback. And by the way, the pullback on those trades has to be a smooth pullback. Okay? Imperative. If it's not a smooth pullback, if on the longs, if the candle to the left's top is not equal to or higher than the candle to the right, it's not a trade. I cannot stress that enough. Then they're just screwing with you. When they tick it up one and then come back down, they're screwing with you. Now they're going to clean you out. Okay? That's 100%. Or a break of the daily high low. By the way, if you break the daily high low, you're also breaking the Donchian Channel, because that's a day, that's at least yesterday when it happened. Okay? Or sometime earlier in the day. So high low or Donchian Channel, either one of those breaks with the pullback into the 1 minute gold line, i.e. 9 EMA, master secret, that is absolutely required for that trade. Period. No exceptions whatsoever. 5 minute red line. Continuation version. Continuation version means we are, say, I'm going to keep talking longs. Say we're north of the red line and we're running up. Okay? And then it creates a Donchian Channel high or daily high, daily low, either one. And then it does a relatively smooth pullback to that red line and then rejects that red line and then runs back to that, normally either back to that Donchian high or that daily high or both. Okay? That trade right there, it's required that you have a Donchian Channel break or a high-low break, just like the 1 minute gold line. Okay? I just can't make it any simpler than that. The difficult part in the 5 minute red line is the fact that the pullback doesn't have to be so smooth, because gotta remember, the people trading that red line are trading with 5 minute candles. So they're not seeing that the candle to the left was a little lower than the candle to the right's high on the pullback. They're not seeing that. Okay, so it just has to be relatively smooth, that it was intentional, that there was an intent from here to here. Then they blew it off and blew it back up. Okay, because they broke out. Remember, they broke out, and then they stole all the people's money that were chasing it. Remember, and they're looking for a place to actually rotate and then take it back to where they was going anyways. Okay. Then there's the 5-minute crossover where neither situation has to happen. Okay. And that's the one that I took today in RTY, was the 5-minute red line crossover. You don't have a break of a Donchian. You don't have to have a break of a Donchian. It could happen. You don't have to have a break of a high-low. Could happen. Most likely not. Definitely not on the high-low. Most likely not. But anyways, but you don't have to have that. What instead you need to have is a 5-minute red line, for example. Let's do a crossover long, because that's exactly what my trade was today, and then I'm going to show it to you. You have price way up here, north of the red line. It comes back, and it just blows right through your red line. It's like, okay. And then it kind of meanders a little bit and then goes back up into your red line from the bottom side, but it blows right through it again. And then it creates space, comes back and sits on top of the red line on the long side from the area it had come from, which was the long side. Okay, it had been hanging out on the long side, broke through, came back up, sat on top, boom, gone. That's your continuation. I'll show you that pattern. You're looking for smooth. You're looking for, it's an eye thing. It's more difficult to identify than the other two above, because the other two have specific tools to help you. Okay. So anyways, I just find it's very important to kind of grasp what this Donchian Channel is trying to tell you, why I have it. It's not just a matter of the damn thing broke. It's that we are anticipating that they broke it intentionally, and then swung it back to take everybody's money. And then they're looking for an inside job of where are we going to reverse this thing? All the algos. Same thing with this. Hold on. Same thing with this. Let's just hypothetically say, oh, this is important. Let me show you this. Where's my black one? Here's my black one. All right. Same thing with this. All right. So say that this is very important. Matter of fact, we had this exact scenario. I think I'll show it. I think it was in RTY today also, what I'm about to show you. So you have a pullback, okay? All right, you have a pullback. And it doesn't get to any of your lines or whatever. Or maybe it does, but it's not a trade. It's not a setup for whatever reason. But here's the important part. And then it goes back up. And then it goes back up. And then it goes back up. But it never pierces this. Never pierces that. And then it rolls over. Does anybody have any idea what that means? That means get out of the way. Don't be looking long no more. Call it a day. Because they're now having to seek a whole new bottom. When this top never clears this top on a rotation back up, it's all over. Okay? So that will mean if you see that happen, that means don't worry about your trades. Don't go look at a different instrument, because for the next so many minutes or whatever, it's got to play itself out. It did it right here in oil at 1:30 this afternoon. It did exactly this in oil at 1:30 this afternoon, and then it just rolled right through the 1-minute gold line and rolled right through the 5-minute red line. Just rolled right through them because it's over. You've got to have it's just seeing these simple things and recognizing them that'll make you a better trader. So, yeah, that right there is a telltale sign. It's all over. It's all over. We're not going long anymore. I don't know what we're doing, but we're not going long. Okay, so let me show you some charts and try to help you out here. I'm going to be out of town for the next few days, so I want to get this video out, and then I'll be back maybe Thursday or so, but, here we go. All right, everybody, this is the RTY. Just a quick update. I want to get this out of the way because I'll forget. See, there it is, $553 today. My balance is back up to 99.27. If you guys remember, I told you I started with $5,000. I took $5,000 out in December. And today's the 13th. I'm back up. I was up over 10 grand when I took the $5,000 out. But I'm back up over 99.27 now. That's my balance. Just dicking and dunking one contract here and there. And my goal is to, in January, take another $5,000 out and just kind of keep doing this for a while. But anyways, let's talk about the trades. Let's talk about the charts. So this is the RTY. I want to show you just a simple thing here. Hold on here. Why is this thing so? There we go. Jesus. All right. So this is the RTY, and it kind of looks like a mess. Honestly, here's the low of the day. Here's the overnight open. This is the day before's low. Anyways, so what did we do? Well, we did exactly this. I noticed that we went up. I was on the phone when this Donchian hit here at 10 o'clock, came down, boom. That should have been my trade right there. That should have been my trade right there. Most likely that should have been my trade right there. But I was on the phone dealing with business and that kind of stuff. Anyways, but I'm sitting here and I'm looking at this chart and I noticed we went down and up, and this did not break this Donchian channel. See how we broke this Donchian channel here? This could have been a beautiful setup back to the 5-minute red line, but it never happened because it pivoted and then went back up and never went through the top. What did I say? When that happened, when this is so important. When this happens right here, when this thing rolls over right here and doesn't break this, again, these little green dots, the highs of these pivots, then you're going to stair step your pivots from that point forward. Mark it down. And you can see that's exactly what we did. So what happened? Well, we went down and blew right through the 1 minute gold line. Not that there was a trade there because we didn't have a new high. And we blew through the 5-minute red line. Not that there was a trade there because we didn't come off of a high. Yes, there was a high here, but we had all this garbage in the middle. Okay, that's not a smooth pullback. From here to here is not smooth when you got this big, huge hiccup in the middle. So what was I sitting here doing? I'm sitting there going, well, we've been hanging around on the long side for a while, okay, for over an hour. And then we had this run underneath the 5-minute red line. And then we ran back up over it and sat on top of it. Bing, bing, done. $400. And can you not see how straight that was, that trade? That's the trade that I tried to say is the 5-minute crossover, where you don't get a break of these swing indicators. You don't get a break of the Donchian. You don't get a break of the daily high. You don't get anything. What you get is you get a continuation in the direction that the market's been hanging out. You had a false breakdown, roll up, and look at that. You have space created there. This is the pattern. Space created there. Nice, sharp down candle. I sat here and just waited and waited and waited. And then when this candle closed right here, I said, yeah, I'm going to do it. And I just dropped my order right there. And that thing opened, boing, boing, bam. I'm done. Now I trade 2 contracts on the RTY. I've talked about that because this is a $5 instrument. So, and it's a $500 a contract leverage to even get it. But that was A beautiful setup, exactly as I would have expected it to happen over and over and over again. I mean, by the way, it kind of did it over here. See how it blew through the red line here, came up, sat, boom, bam. It already did it once right there. And then created a new Donchian high, came down, sat on the 1 minute, the 1 minute gold line, and boom, did it again. And then sat on the 1 minute gold line, and then boom, did it again. And then this right here, that's your sign. Stay out of the way. Stay out of the way and wait until they tell you what they're going to do. And then they did it right here. Bam, bam. I mean, when you start seeing the patterns kind of going over and over again, it becomes rather almost crystal clear at times. The key is to just identify, why do I have these swings here? Why do I have that Donchian channel here? Why do I have the daily high and the daily low and the overnight open on here? Why do I have those things on here? And how to actually trade off those. So the key point is that 1 minute gold line is only a trade when you break a Donchian channel or a daily high, like right here. Only a trade when you break that Donchian channel or daily high and or both, like you did right here. Only a trade when those things happen. It is not a trade when this rotation up did not eclipse your Donchian channel and came back down, and that's exactly why it plowed right through that. And it's exactly why it plowed through your 5 minute red line. That's, little things like that, little things about knowing when, how to identify, did we just break a Donchian channel? Should I be looking at gold right now? Or should I be looking at oil right now? Is really the main way I'm able to look at multiple instruments in one day and not be too involved in any of them. Because I'm looking for, did we just break a Donchian channel? Yeah, okay, let me see if there's a setup coming. If we didn't break one, i.e. like right here, then I don't need to look at this for a while. When this thing collapsed right here, I don't need to look at this for a while. It's over. It's over. Okay? Anyways, this is just a little setup trade thing that I wanted to go over with you guys. And I wanted to emphasize why I have these Donchian channels. Notice down below in this description of this video, I have all the indicators that are on these charts. And today we discussed deeply about the 5 minute red line and the 1 minute gold line. But the main thing I showed you today is what I'm looking for in a 5 minute crossover. I'm looking for it to get rejected and then to come back and partake in the direction that the market has been. And then bam, bam. I mean, can it get any smoother than that? I don't think so. Everybody have a good day. I'll talk to you later. Bye.